So we've all heard stories about people who invested in Bitcoin or some other crypto early on and hit it big.
Dollar bills, y'all.
But for many of us, we're left with a burning question. How do you actually make money with crypto investing? Because the way that crypto makes money is complicated, to say the least. Rental properties produce income from the tenants, and many stocks out there pay dividends, which is a portion of the company's earnings. Crypto itself, on the other hand, is different. It's not ownership in a business, you can't live in it, and it does not pay any dividends. Yet somehow, the price of Bitcoin has appreciated more than almost every other major asset around it in the last decade. Now, anybody can tell you that past results are no guarantee of future outcomes, and nobody knows what's going to happen from here with the future price of Bitcoin and other cryptos. But with that said, here's what has given it value historically and allowed people to make money owning or investing in it. Real quick, guys, I do have to mention that I'm not a financial advisor, and this isn't personalized financial advice. And guys, if you like learning about crypto and other financial topics, you're going to love us. So make sure you subscribe for more crypto content coming soon. So as new as Bitcoin might seem, this is not the first asset of its kind. In fact, there have been many assets in the past that have proven to have substantial value despite not being able to produce recurring income like dividends or interest. The value of these assets is often based on the potential for capital appreciation, and this phenomenon is sometimes referred to as the greater fool theory. Simply put, this means you need to go out and find a greater fool than you who you can sell to in order to make a profit by selling it to them for more money.
Fool me once, shame on you. You fool me, we can't get fooled again.
The interesting thing here is that one of the oldest assets in history actually relies on this greater fool theory, and that is gold. Think about it. Gold does not produce rental income, it doesn't earn dividends, interest, or anything like that. But despite that, gold has been one of our greatest time-tested assets, and the returns haven't been too shabby here either. So with crypto, the way most people have made money in the past is through capital appreciation, or the old adage, buy low, sell high. Let's look at an example now of how people may have made money with crypto, buying it, holding it, and then selling it. Let's say you bought Bitcoin at the peak in December of 2017 for about $19,000. From there, it actually declined in value by about 80% to $3,000 a coin in 2019. If you held on, you would have been able to sell that Bitcoin for about $70,000 by 2021, and well over $100,000 today. That's quite the roller coaster ride for a single asset over the last decade. So despite the fact that the average annual returns have been, for the most part, massive, if you invested at the wrong time, you could have experienced tremendous losses that you might have even cashed out. But for those who timed it right and made money here, it's most likely this buy low, sell high strategy that was being followed. There are a few less common ways that people do make money through crypto, so let's go ahead and cover those now. The first is through something called staking. Some cryptos allow you to lock your coins in order to help run the network, and in return, you earn crypto back as a reward for this, sort of like interest. For example, Crypto.com, a popular exchange, offers various staking rates for staking crypto with them. The primary consensus mechanism called proof of stake relies on validators who instead lend their actual tokens versus their computing power. In a nutshell, the more coins a validator has staked, the more likely they are to be selected to create the new block and thus earn a reward in the process. But there are some unique risks associated with this, so you need to do your own research and look into this more independently. Additionally, not all crypto networks support staking. For example, the Bitcoin network relies on mining, not staking, to validate transactions. Real quick, guys, if you've gotten any value out of this video so far, make sure you subscribe. The next less common way that people make money through crypto is through mining. This is when you use computers to solve mathematical puzzles that are actually running the crypto network in return for earning crypto. This requires a lot of very expensive hardware, and most of the mining operations today are very big players, so it's not common to see an individual making money through crypto mining. If you want to get nerdy, Bitcoin uses a proof of work mechanism, which is why those miners have to solve those complicated puzzles. And the last way is through something called DeFi lending. This is where you are lending out your crypto assets to different groups in return for interest on the loan, just like the banks do. These are accomplished with smart contracts, and that does help to eliminate some of the risk involved with lending, but far from all of it. DeFi lending comes with risks such as contract vulnerabilities, liquidation risk, counterparty risk, and more, so don't mistake this as some kind of risk-free passive income stream. Ultimately, most people who have made money through crypto have done so by buying low and selling high. But of course, some have taken it a step further by looking at the mining, staking, or lending side of things after understanding the risks involved. Ultimately, if you do invest in crypto, a good rule of thumb to follow is to only invest what you're willing to lose. Here at NerdWallet, our rule of thumb is to invest no more than 10% of your portfolio in individual stocks or risky assets like Bitcoin or crypto. That way, if you make money, it's all a bonus, and then if you lose money, it's not really money that you actually needed. I am personally bullish on Bitcoin and the crypto space in general, but nobody knows for sure what the future will hold.
I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in circles.
But most importantly, I'd love to hear what you think down in the comments below. Do you think Bitcoin has value? Why or why not? And while you're down there, don't forget to subscribe. You can click to watch our next video here on Bitcoin Explained in just 5 minutes, and we'll see you next time.